Welcome back to my final morning report. Just goes on Wednesday, the 18th of May, with me, Richard Perry, market analyst at Antec Markets. Let's look at gold, and we're still seeing this consolidation on gold that you can't really get any real upside traction. Monday's sort of failed bull candle just was followed up by a positive one yesterday, but today again we've just unwound all the gains. Sort of $8 down on the day, retracing all the positivity of a bull candle. You're still in this sort of downtrend phase. And it's interesting because we're beginning to see a little bit of deterioration in those stochastics, aren't we? Although the RSI remains above 50, so it's not really excessively negative, but just a failure again for the bulls to get control of this and sort of back below that key sort of the resistance that I'm sort of looking at, 1282.50, which was the old. Let me just show you the old breakout level, 1282.50. Breaking back above that, I think, would be, and closing back above that, I think, would be a positive signal. So on the hourly chart, you've seen this sort of consolidation in the last few days, risk on, risk off. Again, the dollar swinging around all over the place, the gold price making similar moves, but in the negatively correlated way. The hourly chart would suggest that we're now back to levels on the RSI, which in the last few days, certainly the buyers have come back in, or the bulls have come back into support. So you could argue 1269.10 is your initial support of yesterday's low. Breaking back below that, I think you're sort of certainly testing the 1263.10 mark, which was the key reaction low from late last week. But ultimately the key support is 1257.25, which is the sort of recent consolidation lows. And it is just, I think, uncertain as to exactly which way this one's going to break. I mean, I think generally speaking, I'm still positive from the perspective that I think the next move is going to be higher, but it's not really managing to get the traction to the upside and really push on, because that obviously that stronger dollar is negative for gold, and that stronger dollar continues. Although you would certainly argue that, and despite the fact that dollar has been rallying quite strongly in recent days. In recent weeks, the correction lower on gold has not been all that drastic. So I still think that this is a nice consolidation that ultimately will be bought into. But for now, it's just not really managing to find the upside momentum. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.